Right, joining us in the studio today is Chief Economist for CommSec, Craig James. Welcome, Craig.
Thank you very much.
Now, Craig, just tell us a bit about yourself.
Well, I'm Sydney based, so Sydney all my life, but where I started my working career was the Rural Bank of New South Wales. Now, in South Australia, you'd probably know it as the equivalent of State Bank South Australia, where that started from, but it was the Rural Bank of New South Wales, which became State Bank of New South Wales, and then Colonial took us over and then became Colonial Bank. Then along came Commonwealth Bank, and so they took us over, and we became the economic group for CommSec, Commonwealth Securities, the stockbroking arm there. Along the way, I had 1 year where I went to the Financial Review and I worked as a print journalist there. Enjoyed it too, but so ended up coming back to CommSec, and that's where I've been ever since.
Craig, you're over here talking to a group of people this evening. This is the last quarter of 2010. Tell us what's the global economy doing, and then let's cascade down to the Australian economy, and perhaps then we'll look at South Australia.
All right, well, in terms of the global economy, US is always at the focus, and that's still the case. The big question at the moment is there going to be a double dip downturn.
Everybody's asking the question.
Yep, double dip, whether it's a downturn or whether a recession, but are we going to have a double dip, particularly in the United States, and is that going to affect Europe and the rest of the world? Our view is that there won't be a double dip, and for the simple reason that corporate America is in a lot better shape than it was 6 or 12 months ago. They're sitting on, US companies are sitting on $2 trillion worth of cash. The simple thing is that they don't want to do anything at the moment. They've got their balance sheets in good shape. They just don't want to expand their jobs. They don't want to take over companies. They just don't want to grow. We believe this is very much a short-term phenomenon. Really, the investors aren't going to stand for the fact that you've got a lazy balance sheet over a long period of time. So that's the key concern at the moment. Is the US going to go into a double dip? We don't believe that's going to be the case. There's questions about Europe, but again, we think in the whole scheme of things that's not super important. Some of the smaller economies there have got difficulties. They're going through a workout process, but that's not going to derail the global economy.
If you look at, say, China versus Greece, obviously there's going to be some difference in impact in those two economies. Yeah,
I mean, it's real chalk and cheese. So you're looking at the Chinese economy, and if the global economy this year is going to grow by 4.6%, something like 0.9 out of that 4.6 is going to be contributed by China. The United States, again, something in the order of 0.8, 0.9 is going to be contributed by US to that overall growth. If you spoke about something like Greece, it would be something like 0.01. I mean, so it just is not on the radar screen.
But is it psychologically an impact? Is that sort of more the scare factor?
Yeah, I think it's the case that people are looking at Greece and Portugal and Spain and Ireland, and they say, well, if one falls over, then it raises the question about the other countries, what the cost of debt is. When you have problems in one of those countries, it increases the cost of debt for everyone else. So it is this contagion effect, this knock-on effect that everyone's concerned about in terms of Europe, and I think it's just a matter of time that will solve this. It's time cures all ills. It's a case that we just need a little bit more stability for people to say, well, it's not a focus now, let's turn our attention somewhere else.
Craig, we've had an election where the result took forever, the hung parliament, to be resolved. My mail on it is that about April next year we could have another election. Have you heard that, and what's the impact on Australia and how are we tracking?
Well, there is a risk. There is a risk when you've got such a very small majority happening, and you've got the independents helping the government, over the line in terms of the votes, that you could easily come to an issue and they say, well, we're not prepared to support you any further. So there is a risk of the government going back to the polls. My sense is this is what a lot of Australians would hope for. That, look, we can finally get some resolution. Let's go back there. Let's do it right this time. And perhaps you don't get the same degree of support for the independents and for the Greens. The major parties will probably get a little bit more support. and perhaps we'll get a clear result.
So this turmoil, has that put at risk our recovery or as the strength of our economy, or do you feel really confident with the Australian economy?
I'm confident about the Australian economy. I don't think the politics really matter too much because, yeah, at the end of the day, who sets interest rates? It's always the Reserve Bank. Who sets the value of the Australian dollar or some of our market-determined interest rates like 90-day bills, 10-year bonds? Again, it's the market. Provided the government of the day keeps our finances in good shape, and both sides are committed to getting back to a budget surplus, then really I don't think that should derail the global economy or domestic economy. It's more a fact of people's confidence levels. That's what's really affected.
So looking forward sort of to the medium to longer term, well, let's say 6 months, let's say 2011, do you see that people will be better off in Australia and feeling more relaxed about the situation, or do you think we'll still be talking this time next year about potential double dip and, you know, all of the political hoo-ha and interest rates? So what's your feeling about, you know, the end of this year and next year?
Well, I think as we get into 2011, people are going to be feeling more relaxed about the global situation. So I think by that time the US will be firmly in recovery. Europe will be in recovery as well. China will still be a focus. That will still be attention. Are Australians going to be feeling a whole lot better in 12 months' time? I don't know whether they will actually. I think in 12 months' time the focus will be more in terms of Australia and high interest rates. And that's my concern, that the Reserve Bank will go down the path of lifting interest rates over 2011. And that's going to be the factor that most people will be focusing on. And of course that doesn't engender a lot of confidence. The fact that we are lifting interest rates means the economy is going to be doing well. But I think people will be feeling a little bit uncertain about where interest rates are headed.
And there's a lot of discussion about the interest rates being the blunt instrument. There was an article in the papers the last couple of days about that. There's a lot of talk of the rates being moved up again. What do you think the impact will be in the property market specifically if the rates go up?
I think if it's a case that people are prepared for rates going up, they've done their homework, then it doesn't necessarily have to be a bad thing. It's when interest rates rise and people aren't prepared for it that we get some surprise, we get some shock movements, perhaps people thinking that interest rates are going to rise by a quarter or half of 1% and they go by more than that. I think what people need to be doing now is preparing themselves for higher interest rates. Factor that in. Factor over the next 12 months, perhaps rates moving up by 1 percentage point. Do your sums on that. Prepare for it. And if it comes, you've prepared for it. If it doesn't come, well, perhaps you've got a few extra dollars to play around with.